Ant Group's restructuring efforts hit a big snag last week as a major investor pulled out, which has left Ant Group searching for a new supporter to satisfy the CCP's capital requirement. That's what we're going to be quickly covering in this video, so smash that like button and subscribe if you're new. You're watching Moore Money. Let's get it. Alright guys, it looks like Ant Group has suffered a bit of a setback to its CCP-led restructuring as a state-owned asset manager, China Cinda Asset Management, which is controlled by the country's finance ministry, announced on Thursday that it was withdrawing from the deal after a prudent commercial consideration and negotiation with the target company. Note that they were expected to invest $946 million in exchange for 20% of Ant's loans business. And if you guys recall that Chinese regulators blocked Ant Group's huge $30 billion plus IPO just days before it was set to debut in November of 2020. And of course, the reason why the IPO was blocked was because financial authorities have been focusing on reducing risk in the Chinese financial system by limiting Ant's financial risk as part of a rectification campaign. There were worries with the amount of loans being made by Ant Group relative to the amount of capital that they had. As I understand it, they want them to be regulated like a Chinese bank. According to the Financial Times article, which I will link in the description below, the rectification plan includes winding down Ant's biggest self-run fund and forcing it to spin off two of its businesses into new companies, which in turn have accepted state-owned shareholders. Ant's lending business, which accounted for approximately 39% of its revenue in the first half of 2020, is being transferred to Chongqing Ant Consumer Finance Group, in which Ant Group holds a 50% stake. Ant Group's user data will support a new credit scoring company being set up with state-owned shareholders, in which Ant is expected to hold a 35% stake. Cinda's planned investment was part of a capital raising for Chongqing Ant to increase its capital base to allow it to continue lending to millions of users in Ant's Alipay app. The increase in capital brings Ant Group's lending business within the new government's rules to rein in financial risk. Now, the new company Chongqing Ant said it fully respects the business decision made by Cinda, and it will work to bring in new investors to ensure the rectification work on the consumer finance business is effectively carried out. In my opinion, this is a big step backwards because $946 million is a lot of capital to replace, so it'll likely be difficult to find a replacement investor or investors, but I do think that they will eventually get it done. I also think that de-risking a business and adhering to regulator demands isn't easy, especially when you're also running a business. Recall, guys, that Ant Group showed quite exceptional growth with profits increasing 39% in the June quarter. Note that a big part of that was one-time fair value changes in its investments, so we'll be following the story closely as we get updated on subsequent quarters. Guys, if you haven't done so already, please consider subscribing to the channel. I do my absolute best to bring you non-hype research-focused content, and with your subscription, YouTube extends the reach of this channel, which allows us to help more people. If you're interested in getting more information on the prospects of the Ant Group IPO, back in November, I put out a quick 2-minute video where I show you how Ant Group's IPO is closer than you think. You can get to that video right here, and I really encourage you to view it.